right, all eyes on the outcome of the US Federal Reserve meet that's happening later tonight. Fed is expected to maintain rates at the current levels. However, the street will be looking out for the commentary on the likely rate cut in the September policy. Now, we are joined by Santosh Rao, who's the head of research and partner Manhattan Venture Partners, joining us now to weigh in on the FOMC meet. Hi, Santosh. Welcome to Rush Hour. Santosh, right off the bat, the US Federal Reserve is poised to announce its fifth interest rate decision of 2024. And the market analysts are widely expecting that Fed is likely to maintain the current interest rate, in the range of 5.25 to 5.5%. Now, while the inflation has shown signs of improvement, dropping 0.1% in the month of June from May and registering a 3% annual increase, the labor market has displayed signs of cooling. Now, this moderation has fueled speculations of a potential rate cut later in the year, potentially in the month of September, is what everybody is penciling in. Is the stage set for the first rate cut? Given that we have a meeting today, are there going to be any signs of that?
Absolutely. I think you said it right. What the Fed is going to do is set the table for September. July is too early. I think what they wanted to see was consistency. So I think September is very likely. It's not a given, very likely. We have two CPI reports before September. So if he gets confirmation that inflation is indeed coming down, so I think it's off to the races. He's going to have his first cut in September and possibly in November and December also, depending on how things are going. But I'm in the camp. I was in the camp until 2 weeks ago that there would be just one cut in December. But I think as the data is going, things seem to be going in the right direction. The labor market is cooling just enough. The consumer is kind of slowing down just enough. And like the Fed chairman said, the labor market is in good balance at this point. So I think the stage is set for a cut in September. And the one reason why it's September and not July is because not today, rather, is because once you start cutting, and the Fed has said that they want to have some consecutive cuts down the road to kind of get it to some more reasonable level. So I think that's the reason. One cut in September right now. That's the table he'll set, and then one possibly towards the end of the year, one more. So two cuts total this year.
All right, so two cuts is what you're penciling in, but speculations over when and how much will the rate, the Fed cut the base rate is also rife, given the extraordinary balance that the Fed has thus far maintained between fighting inflation and, avoiding a recession. And the market is now, pricing in at least two 25 basis points cut this year, including near 100% chance of a September cut. What's your view on that? When can these rate cuts come in? And you've already mentioned that there could be possible two rate cuts in this year.
Yeah, I think the market's priced in a September cut for sure. So I think that's where we're going. We don't want things to get too bad as well. And if it weakens a lot, and if they signal more than two cuts, that means there is a sense of panic and the economy is slowing down very appreciably. He wants a soft landing. That's what he's aiming for. And that's where the economy seems to be going. So I think he'll continue that. So I think that's what the market is. I think I'm on that side. I'm in the market side, which two cuts. The stocks are trading as such as well. So you're going to see that way. So September is the cut. That's like I said earlier. That's where we'll start seeing the cuts.
Right. Also, Santosh, today's meeting, everyone will be watching out for the commentary that really comes out. That is something that people are closely watching out for. What are the key factors that you will be watching out for, in the Fed's meet today? And what is going to be Fed's approach towards inflation and unemployment going ahead?
Yes, I think that's very important. The commentary is always the most important thing, and that's usually the third point that they when they project forward projections. So we will see. I mean, he's essentially, I think, going to say, or we want to hear that the market is fairly in balance, and he's already said that in a previous meeting somewhere else. So the labor market is in balance. We're not falling off the cliff. I mean, it's not going to be like a recessionary in the sense that employees are just going to start laying off en masse. It's not going to happen. So I think you're going to hear that, okay, the labor market is going along fine. Inflation is trending correctly. And we want to see two more, at least one, confirmation that things are sustainable, the downward trajectory is sustainable. So that's an important point. That's the word that people are going to be looking at. So they are getting more and more comfortable with the inflationary trend and the labor market. So labor market is kind of dicey. We don't really get the full picture until he says they get a full global 360 view of the country, so they can give us a good idea as to how the labor market is going. And at this point, there is news about companies still laying off here and there, increasing in some areas. So we have to see how, on balance, is it okay? Is it just reasonable enough for him to feel comfortable that the labor market is just right? The conditions are restrictive enough, just enough to kind of keep the economy going and expect a cut down the road. So that's his main thing. Is the economy restrictive enough? That was the whole idea of slowing down inflation and slowing down the employment and the spending part. And you're seeing signs of that it's restrictive enough that the consumer is slowing down, companies are projecting less demand. So all that is good. So I think all the conditions are right for him to really say that, and we are expecting him to say that.